Hey, good afternoon traders, hope you've had a smashing trading day so far. Finally, some volatility back into the FX markets here, with the dollar moving sharply lower and risk effects attracting some good bids, so maybe you've taken advantage of some of those market moves. On to then the topic of this post, which is all about those all-important UK PMI figures, and also what that means for the sterling. So obviously, earlier today we had UK PMI figures being released, so manufacturing came in at 50.1 versus estimates of 45, and services came in at 47 versus estimates of 40. So from the outset, very positive. It does show the UK economy really starting to pick up here, starting to see activity really rising, and that's indicative of higher demand across the board. So the outlook for the UK economy is certainly improved, and it is fueling that sort of hope for a V-shaped recovery, at least for the UK economy anyways. So in terms of then the way that the market's going to view this going forward, well, it's interesting because in the case of sterling, you do actually have two sides to this. So as I said from the outset, the PMI data looks positive, but IHS Markit, which is the entity that's responsible for producing this data and sending it out, what they did say is that in terms of total new orders, that did actually fall in June. So the manufacturing figure that we've seen at 50.1 can't really be taken at face value. And also in terms of the services figure at 47, well, typically anything below 50 does show an economy that is in a state of contraction. So if we were looking at this data purely from a data perspective, well, the UK economy wouldn't really be on that recovery stage. It would still be in a state of contraction. So if markets do decide to focus on that, coupled with the fact that we also have a Bank of England that has really taken the sort of laid back tone, and we discussed this in the previous blog, but just to give you a recap, last week the Bank of England announced that it would be reducing the rates at which it's purchasing bonds at, and also really providing some uncertainty as to how committed they are to supporting the UK economy in comparison to the likes of, let's say, the RBA, who were very supportive and very vocal about doing absolutely anything that they can to support the Australian economy. So we didn't really get that from the Bank of England, and that would likely continue to weigh on the pound. And also we have on the back end of things UK and EU tensions there in terms of trade and the whole Brexit scenario. So that's also still in the background, and not much has happened in terms of development there. So that's also going to continue to weigh on the pound. So if markets focus on those sort of three factors there, then that will obviously be a bearish thing for the pound, and we'll see the pound start to rally towards the downside. However, if the markets look at these PMI figures and say, well, actually, despite the fact that maybe orders have maybe fallen a little bit, these PMI figures are actually good when compared to the expectations, when compared to last month. We are seeing a bounce back in the economy without a doubt, and that could be a positive thing, and markets might just rally on optimism. And if you have a look at what's happening right now in the markets in terms of the US dollar, well, the US dollar right now is acting as a safe haven, and those PMI figures on the US side have been relatively positive, which is why we're seeing that sell-off. And with regards to euro earlier, with the German and Eurozone PMIs, we did see a nice bid on euro as a result of those positive PMI figures. So in a similar sort of scenario, if the market participants begin to focus on these PMI data releases from a more distant perspective and not really diving too deep into it, then we could potentially see that sort of same rally here for at least pounds or sterling pairs. So do bear that in mind.